Hello everybody, welcome back to this 19th episode of the Basic Concept. So today, as you've seen by the title, we're going to speak about higher time frame versus lower time frame. So what does that mean? I put the initial, so higher time frame and lower time frame, the initials of the words say what what I'm indicating. So HTF, higher time frame, LTF, lower time frame. Okay, so what do I mean first of all about higher time frame, lower time frame? So basically, higher time frames are the time frame here. You can choose it on TradingView here, so you can choose it. It's what I consider the weekly time frame all the way. So the weekly time frame for me is kind of the highest you can watch. There's also the monthly, the quarterly, but again, for day trading is not very useful. So we have the weekly time frame to see kind of the power free of the week. Maybe we're manipulating and then we're putting in the wick. Here there is weekly order block. We can also go directly to the daily, which is important for have daily high, daily low, daily gaps, daily fair value gaps and highs or lows. Those are really, really important. And then we can also go to the 4 hour, which is very important for the 4 hour gaps that I always mark out. And also here in this case, a 4 hour wick that you can see here, this rejection block that worked out perfectly here in this case on Wednesday. And then we have, I think, 1 hour is still considered higher time frame. And again, it's similar to the 4 hour, but it's more detailed, more precise. So this is what I consider higher time frames. And then for lower time frame is all the way from the 15 to the 5 to the 3 to the 2 to the 1 to the 30 second to the 15 seconds. But mainly I use the 15, the 5, the 3, the 2, the 1. Okay. So basically, this is what higher time frames and lower time frames are. So the things and the phrase that you hear a lot on TikTok, on Instagram, whatever, of these experienced traders that speak, is that you want to align your higher time frame analysis with your lower time frame analysis. So what do I mean is like, if, as the case here, if my higher time frame in this case here, that we go to this rejection block, so this big wick, we respect here, I think it was a 15-minute gap. We put in this wick and we create this. We are inversing this small 4 hour gap. Okay, so this is a 4 hour here. We're clearly inversing it. My higher time frame analysis is okay. We're gonna be bullish. So this candle and these things afterwards, it's gonna be bullish. So we're closing above a high. We're delivering from this rejection 4 hour rejection block. We're inversing this 4 hour, and we took here lows. So my higher time frame is telling me, okay, I'm bullish. We're near all-time highs in this case. And what do I want to do? So I want to align my 15-minute. This was, I think, an hourly gap. My 15-minute, my 5, and my 1-2-minute analysis can align to being bullish. So I want to see here, in this case, look, here on the 1 minute, we have the first presented, I think, yes. This is a bit, okay, to put it better. Okay, in this case, we have, yes, it was better here. Suck. In this case, we have the first presented gap here, and we have also this gap here that is being inversed, okay, after we take in lows. We're inversing this gap, and I'm like, oh, okay, this is a very, very, very nice long. It's pretty early on, but again, if you want to take it, and you want to take it to Asia highs, again, this was a wonderful like zero drawdown trade. The stop would have been kind of tricky, but still, my higher time frame of like, okay, we're bouncing off OTE, we're bouncing off hourly, we're bouncing off a rejection block, and also my lower time frame, so on the 1 minute, on the 5 minute. We're having a sweep here, then we invert in the first presented, and then we have good momentum to go to Asia high. We also have this high here, and also have higher all-time high narrative. So again, this is kind of an example of what happened Wednesday. yes, I don't know why sometimes I stop. So this is kind of an example of higher time frame. So what I saw on the daily, what I saw on a 4 hour, what I saw on the hourly, to then scale down to the 15 minute, to the 5 minute, to the 1 minute, to the 3 minute, and see what price is telling me. Okay, so also use again the telling the bodies and the wicks of the video before. So the wick in that case, that was the 4 hour wick, was telling me, was doing the damage. Okay, so I was bouncing off of this rejection block, but the body, so the body closure above this gap, the body closure bullish above this low, okay, was telling me, okay, the story now is we're going higher, we're going to all-time high. Okay, so this can kind of help you out navigate the days. Of course, this is a one example, but there are plenty of examples. So you kind of always want to align your big draws or your higher time frame analysis. So if you have a 4 hour low, if you have Asia high, London low, whatever, if you have any type of draw of higher time frame, then you scale down the lower time frames to then take a trade that is accordingly to your high time frame analysis. Of course, this is not always the case, but you want to be sure that you kind of follow this rule. If not, you ended up taking maybe trades just on the lower time frame. That sometimes the lower time frame can be confusing. Sometimes we are just range bound, so we're just basically doing a barcode. We're scanning a barcode, so we're just going sideways. We're really not doing anything on the 1 minute. I think there was a nice example of doing nothing. I think here, yeah, I think I took a BE here. Like, so you can see here on the 1 minute, there's not much. Okay, so here again, I remember we're delivering from an hourly, took in London, and then here we inverse this gap here. So this was the trade I took. So from this, I also did a trade recap. So in this case, my higher time frame, so bouncing from an hour low, taking liquidity, and still we have all-time highs here, was aligning with my lower time frame. So lower time frame, take the low again, break structure here, we inverse this 1 minute gap after rebalancing from 1 hour. We are still in a discount, and yeah, ended up being break even, but still you can see there how the higher time frame, the lower time frame were aligned. And so when you have this clarity of going kind of in a direction, again, reactive what price has to tell you, then you can have higher probability of succeeding, a higher probability of your trades being, well, having a thought behind and not just going short or long every 5 seconds, seeing always the 15-second time frame, the 30-second time frame. It's just a lot of noise on the lower time frame, especially on the 15, 30 second, even on the 1 minute. There is a lot of noise. That means there's a lot of this price is like a bit tricky to see kind of where it's going, but you can have your higher time frame saying, okay, remember that we have this, and this to then go up or to go down. Of course, this is again is all of probabilities, and you all know that it's not always clear 100%, but still, this I think is a very important thing. It's still a bit more complicated, but always to have on the back of your mind your higher time frame analysis and your lower time frame analysis. So put them together, and I'm sure you're gonna take a lot of better trades. A lot of time was just going the day, just watching the 1 minute or the 5 minute, not even watching the 4 hour or the hourly or the daily, or to watch other sessions, so Asia session, London session, PM, lunch, whatever. And yeah, I was just watching the 1 minute. I was going short, long, whatever, every time I saw something. And that's of course not a good thing. And that's of course, I don't want you to do that. So yeah, I think that this could be really useful to you. And then yeah, I'll see you in the next video, and thank you for listening.